Yo, what is good, family? Hope you all are having an amazing day. Let's kick it off with today's video. We're gonna break down the swing strategy today for y'all. So, we were able to capitalize on a few movements since market has started the very structure right here since 1 month and a half already. And I wanted to break down these two specific shorts, not only because they were the best, because basically we have been getting a lot of shorts through all this bear structure and on this bullish structure also pretty solid. What I want to break down is that the importance of following the trend, because I have a lot of new students. I had a lot of new students this last month, and they came with a lot of bad habits and other type of strategies and everything. And when the market was going lower, that was perfect. But when it was going too low, they were already looking for longs. They were looking for longs right here, longs, longs, longs. And yeah, sure, if on a bearish trend you're always trying to call the bottom, at some point you will make money. But if the trend is telling you to go bearish, why are you going bullish? And that most of the times comes from a lack of trading system, a lack of a specific sequence of confirmations that makes you execute. And because you're missing out on the most important factors, you are just following your eye and saying, oh, market is too low, I have to buy. And you're following into the market, and that's what is basically killing all your momentum and your progress. So let's break it down. First of all, to master the swing strategy, you have to master the intraday strategy. In my channel, you guys see me breaking down constantly the M5 minute setups that I share with my students live every day. And if you don't master that strategy, it will be very difficult for you to master this one. Not because this strategy is complex, but because they share the same core concepts. I have multiple systems, but all of them share the same core concepts. All right. And that must be your case. You cannot have five different systems, one smart money, one support resistance, one with a lot of indicators, one with naked chart and only time of the day. I mean, you could go crazy if you start sharing a lot of multiple core principles in a lot of different systems. So in the beginning, it's better to only have one strategy. And when you are developing your own portfolio of trading systems, it's better to have all of them sharing the same core concepts, which is not the same confirmations, obviously, but the same concepts is the most key part of this, of having a portfolio of systems. So the main thing is going to the 4 hours and marking up the trend and mark up the last impulse. That's the main thing. All right, you go to the 4 hours, and in this case we had low, lower high, lower low, lower high, lower low. This is basically how the trend was. And as you can see, my way to mark up the structure is not based on subjectivity. It's based on highs and lows of the candles and what levels those candles create. It's not based on, oh, I see the structure now this way and a different time I see it this way. No, 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 no. It's always in the exact same way, following highs and lows from candles, which is going to be the same way from someone that is being with me for 5 years or for someone that is being with me for 5 days, right? It's literally the same. So once we have the general range in the 4 hours, we have high that makes a low. Now we go to the 1 hour. And in the 1 hour, we are only interested to see the reversals when the price gets to a specific level. So we're going to throw a fib from high to low in the 4 hours, and we're going to wait for the price to get back to the 50%. All right. Why the 50? Basically because it's the equilibrium point, nothing new for you guys. And basically, yeah, we could look for deeper ranges, for deeper levels, but Bitcoin, when it's riding a trend, it doesn't have to go deeper. Yes, in this case, it went to the 79%, and you guys could be getting a better entry, but it's not going to be the norm, right? In a strong trend, you're going to see the price respecting the 50%, perhaps even the 62%, and then keep going bearish or bullish depending on the trend. So what you are going to basically do is mark up an area from the 50 to the H4 lower high, and that's going to be your area of interest. I never mark up a box, right? I always put the fib like this, the 50. When price taps the 50, I basically remove the fib, so I have a cleaner chart. I will leave the reds, the green circles, so you guys can have a reference of the 4 hours range, but I also don't have the green circles because I already know the chart. So I have pretty much a very naked chart, basically. Once we tap the 50, I'm interested in having a bearish reversal in the 1 hour, respecting the last H4 lower high. Now, the two different patterns is literally the exact same thing as the 5 minutes. Is either a BOS or a rule of the third impulse. Now, the main difference between the swing system and the M5R is the way to execute. With the 5-minute system, we execute based on sell stops or buy stops. Simple. Why? Because of two things. Well, mainly because of one thing, which is volatility and time of the day. Because on the M5R we trade on the open of the session, let's say open of London session, 9 a.m. Madrid time, we have the market having a lot of volatility kicking in. Therefore, when we have a sell stop being triggered, we have a lot of chances actually to see the price running. And that's why I share pretty much every single time that we have a video right here in YouTube is based on a setup that I had that exact same morning with my private group of students. And a lot of setups are just 3 minutes, 5 minutes, 10 minutes long because market has a lot of volatility. And that's the advantage of executing with sell stops, well, with the stop orders. Now, when we are trading on the 1 hour, we don't want to go with pending orders. Why? Because of two main things. The first one is the volatility, because right here we are not trading at a specific time. I allow myself to execute these type of setups from the moment I wake up to the moment I go to sleep. That does not mean that I'm all day executing setups. Out of 7 trading days of a week, perhaps we have 2 or 3 trades. So it's not going to be like a very high trading frequency strategy. Actually, it's mid-low. So I allow myself to be open to any of those setups at any moment of the day because I know that even that is not going to be a super high frequency strategy. That's the main thing. Now, the second thing is flexibility. On the M5 system, we can execute with stop orders because at any moment it can go active, but it's only 1 hour. So inside that 1 hour of trading, we are ready. We are focused in front of the charts, ready to execute the setup at any moment. But with the swing system, you don't have a specific time window. So you're not going to be all the time checking the chart to see if the market is ready for you to put a sell stop or a buy stop. You're not going to do that. So for me to have flexibility with this strategy, I just wait for the candle close. Why? Because I can have all the hour free and just have an alert on my phone 2 minutes before the closing of the hourly candle. So if right now is 6:31 p.m., I will have an alert at 6:58 and see at 6:58 what is going on. I quickly check if the 1 hour candle did something. If there is something like a pattern that is being completed and ready to execute, I will be setting up the scenario, the trade in my platform, setting up the risk and everything, and wait those 2 minutes to end so the hourly candle closes. And I will just execute the setup if the price closes below the level. If it doesn't, perfect. I will wait 1 hour more. There is no rush. All right. This way, you don't have to be constantly checking the market. It's just opening the chart once every hour for perhaps 1 minute, and that's it. So there is a very high advantage of this, which is flexibility. Now, if you have some situation that is not allowing you to do this, well, it's just basically about adapting this. Perhaps instead of going on the H4 and H1, you look for the direction on the daily and then the setup on the 4 hours. So you have even more flexibility. That will mean less setups, but it's still profitable. So it doesn't really matter. I do H4, H1 because of the increasing of the trade frequency. But if by any means that's impossible for you, daily H4 it's also good, even weekly and daily. But you know that the trade frequency right there is very low. Now, with this being said, let's move the candles because for the moment we have nothing. So market right here creates a bearish candle, another bearish candle, and now a bullish candle. So what does this mean is, okay, we have a higher high, higher low, and right here price can either create a higher high or create a pullback to now go lower. Let's see. The market eventually creates a pullback. All right, we have a low, lower high, we have a lower low, and this is a lower high. Why? Because this candle is not breaking previous candle's low. Therefore, we consider that as a pullback. First impulse, first pullback, second impulse, second pullback. Now for us, we wait what? We wait for the price to break and close below this line. Why? Because we are setting up for a bearish rule of the third impulse. For the M5 system, we will just set a sell stop right here. But we wait for the candle close. So we will wait for the candle close below this second lower low level. Now, as you can see right here, market just breaks. It's not closing below, so there is no entry. Market eventually rejects and now creates a bullish break off structure. We had this lower high, now we have this lower low, and creates a higher high. So this is a very interesting scenario. We just covered this a few times in the channel in the last videos, but basically when we have this, okay, two things can happen. We broke the structure. We can either keep going up and create a bullish trend or keep going lower. If this is the scenario that happens eventually, we understand the structure now as first impulse, first pullback, second impulse until this low, second pullback to potentially create exactly a third impulse. So on those possibilities, because 4 hours is bearish and we only focus on sells, we now have our break and close level right here because the structure now is like this. First impulse, first pullback, second impulse, second pullback. Entry to the third impulse potentially if price closes below this level. Eventually, spoiler alert, market went to the downside, breaking and closing below the level. That's what we want. Invalidation as the M5 system above the highest high of the entry model. If we are on a rule of the third impulse, we put the invalidation above the highest of the rule of the third impulse. Pretty simple. Now let's go for the exits. We're going to always aim for a lower low. Now, in this case is 1 to 0.81 risk to reward ratio. We have a minimum of 1 to 1. So if the risk to reward is less than a 1 to 1 to the lower low or to the higher high, we do one simple thing. We grab a fib from low, all right, to high, and we put the 1.618 fib extension, and that's going to be our lower low. That's going to be our exit. In this case, we had a 1 to 1.94 to the 1.618 fib, and that's way much better, all right? This was given on a Saturday night at 10 p.m. This was given last Saturday, and basically, price gave a deep pullback. Eventually, on Sunday morning, we had price almost hitting the invalidation to then tap the demand area to then break the lower low. Then Sunday evening was pretty bearish, but then Monday morning came back to the level of entry, to the area of entry. And then for the rest of the Monday, we had the price melting all the way to the downside. This was on a news candle at 3 p.m. And then eventually market melted to the exit. So this was a total of almost 2 days of trade. This was 1 day and 22 hours. For me, anything that goes to the next trading day is a swing setup. That's for me. So yeah, I consider this as a swing system. Some people consider a swing setup for more than a week. Whatever. All right, I'm not gonna argue on that. I consider a swing setup on something that goes beyond the next trading day. In this case, you can see that after the setup was executed, we had a BOS against, then market went lower, we created a lower low, came back to entry. I mean, a lot of stuff. But I don't care. When I execute, I care about this structure. I have my invalidation, I have my exit. I don't take partials, don't move to break even, nothing. Hold everything, invalidation or exit. So with that being said, that's literally everything about the swing system. Now it's all about following the strategy. It's all about following the strategy. There is literally nothing else. All right, guys. Remember, on the description of the video, you have the link to my free Telegram, where I send updates pretty much every week about how do I see the market. And you also have the link to my Instagram. You can send me a DM and ask me about available spots for the private group of students to see if there is something for you. If there is, you will have access to my strategies, to all my intensive courses, to all the live analysis that I do from Monday to Friday in Spanish and English, giving these type of scenarios, such as this one that we gave live. This was given last Thursday, as you can see here. This was at 8 a.m. I have my sessions at 9. We were kind of drawdown right here at 9, so it was perfectly able to be taken. Eventually, this was almost a 1 to 3. This was an intraday, for example, right? This was 9 hours long. I don't consider this as a swing setup, but it's executed with a swing strategy. But eventually, this was an intraday because we had news and red folders and everything, and market was faster basically. But you will have access also to the private app where I send all my ideas, included this about Forex and crypto. So yeah, guys, with that being said, see you in the next videos. Let's get it. Take care.